and welcome to Fidelity Connects. I'm Pamela Ritchie. U.S. President Trump hit pause on his tariff war with Canada and Mexico. Just pause, though. A move that calmed consumers, investors, and currencies around the world. Even though we did see China announce new retaliatory tariffs on select American imports, global market sentiment remained cautiously optimistic. To what extent does President Trump's tariff strategy reflect a genuine commitment to North American security issues? And is trade war rhetoric going to be reshaping international trade dynamics and geopolitical alliances? Today, I'm very pleased to say that we are joined by Canada's former Chief Trade Negotiator, Steve Verheul, who is, for what we hope is an insightful conversation for you on trade policy, on negotiation, on what incoming tariffs might mean for investors. Steve was responsible as Canada's Chief Trade Negotiator from 2017 to 2021 for helping to lay the foundation for Canada's most important trade deals, including the new NAFTA or USMCA or CUSMA, however you want to term it, as well as Canada's European Union trade agreement. Most recently, Steve served as a special advisor on trade policy to Canada's Deputy Minister of Finance. A warm welcome to you, Steve. Thanks for joining us here today.
Happy to be here. Thank you.
Let's begin with a little bit of dust has settled from the anxiety of Monday and leading up to that pause. Your thoughts, please, just a couple days out from that.
Well, I think that we did kind of go right up to the brink of seeing those 25% tariffs imposed against us, 10% on energy. We managed to get a reprieve for 30 days, but I think by no means should Canada relax. We've got a challenge ahead of us. We're going to have to face that.
I wonder if you could set us on the right course here. There's lots of discussion about what tariffs are. They're learning it in school. It's becoming a word that we all need to understand. Do we all understand it? Set us straight. Is it a tax on growth? Is it inflationary? To what extent is it both? How do you look at it?
Well, it's clearly a tax on imports. And despite what President Trump frequently says, it's not the exporters or the exporting country that pays that cost of tariffs. It's the importer that pays that cost. Now, occasionally, negotiations can take place between the exporter and the importer, but by and large, the importer is responsible for paying those costs. Clearly inflationary, particularly as it relates to energy products and agricultural products, but it's a tax on imports.
Okay, it's a tax on imports. Okay, we'll leave it at that. It's a tax in that sense.
It's a tax.
Which can cause other things like inflation. And I wonder if also you can sort of, before this whole conversation and we dig into the details, if you can tell us a little bit about negotiations. I mean, we'll hear things like, never get up from the table, always stay at the table, stay calm. You seem like a very calm individual. What are negotiators' sort of key responsibilities here?
Well, it is to try to reach an agreement, and that's the overriding objective. But I have to say that there is not any kind of necessity of staying at the table. I have walked away from the table in negotiations with the U.S. and Mexico. I've walked away from the table in negotiations with the EU. Sometimes you have to do that depending on how the dynamics are unfolding. But every negotiation is a little bit different, and I think we need to recall that we went through a negotiation to reach agreement on a new accord between Canada, the U.S., and Mexico during the last Trump administration.
Indeed.
And revisiting that now is certainly something that we find rather difficult on the Canadian side.
Are we revisiting it now, like not in a few months? Is this part and parcel of what Monday or March 1st is all about?
Well, I think it is to some extent. We do have a provision in the existing agreement that there is a review that is to be concluded by July 1st, 2026. That's built in. President Trump has accelerated that process by saying that they want to have an assessment of the impact of the agreement and the adoption of the U.S. position on the agreement by April 1st under his executive order. So that process is being accelerated. But it's not clear what's going to be a part of that discussion because he's approaching tariffs and trade from a number of different perspectives right now.
Well, let's go into a couple of those. The ones that we know are obviously border fentanyl to whatever degree was necessary. It looks like those issues have at least had a lot of effort directed at them. They're ring-fenced enough for President Trump to have hit pause. Where do we go now? There's a list that came out at the end of January.
Yes, the border issues are the most immediate question and challenge that we have. We managed to dodge that immediate impact by the 30-day extension, but the border issues are still a preoccupation with the U.S. Even though Canada is responsible for less than 1% of fentanyl crossing the Canadian border into the U.S., less than 1% of illegal migrants crossing from Canada into the U.S. We're very insignificant on those issues, but the profile has been high, and President Trump is focused on that. So that's the immediate issue. In the slightly longer term, he's focused on trade deficits, and the U.S. does have a trade deficit with Canada, but it's one of the smaller trade deficits that the U.S. has with various countries around the world. And our trade deficit, or the U.S. trade deficit with Canada, is largely tied to energy resources, oil, gas, and electricity. If you take those out of the equation, the U.S. has a significant surplus in manufacturing goods and other issues of about $60 billion. So there's the trade deficit issue. There is also the issue of unfair trade practices, which they are in the process of preparing a report to be submitted to the president by April 1st. China is likely the largest target on that issue, but Canada could be drawn into that as well. And then lastly, there's the whole issue of setting up the review of the existing agreement and U.S. participation in that agreement, which is also on the agenda.
Some of the issues, we know the digital tax, for instance, policy here is not popular with Donald Trump. There are a number of other things there as well. I mean, supply management comes into the mix, the way we organize our economy. What are we aiming to do now? Let's go to sort of the leadership question in this country, which is a little bit all over the place, actually. Potentially, Donald Trump will be negotiating with 3 different prime ministers in this year alone, which is not great for us. But tell us a little bit about our domestic abilities right now in terms of leadership. Just sort of opine for us on what's going on in Ottawa and also the election in Ontario.
Well, we are in an unfortunate position right now because ideally we would have a very clear mandate. We would have very clear leadership on all of these issues. But as you mentioned, there's a lot of uncertainty. The prime minister is expected to step down within the very near future. We've got a leadership contest on the Liberal side. And obviously that's uncertain with respect to the outcome. And beyond that, we've probably got an imminent election, which could lead to a different prime minister coming into power. So not a great place for Canada to be right now when we really need consistent and clear leadership on these issues with the U.S. We don't have any choice but to deal with that, but it's far from ideal. And I think part of the reason we've been getting so much attention on Canada as compared to Mexico is because we do have a certain degree of uncertainty with respect to the leadership in Canada.
Do you think, irrespective of who might be leading the federal government when this year's budget comes down, that it's going to be a vastly different focus, a pivot, if you will, in terms of how government spends in this country? I mean, to what degree do you think, maybe not details, but sort of the direction of travel on how Canada directs its resources in terms of money to various things? What's that going to look like directionally, do you think?
Well, I think that there's kind of two paths in front of us. I think the preferred path is that we find some accommodation with the U.S. that would allow us to achieve some greater security with respect to the agreement we have with the U.S. for duty-free trade between the two countries, and the development of resources that would go into that as a part of it. But there's also another path that if the U.S. is really going to be looking at imposing these kinds of drastic tariffs on Canada, then we have to look at alternative export markets. And that kind of thinking is being looked at intensively right now. It's not a short-term issue because it would take time for us to develop alternative markets with respect to oil, gas, critical minerals. Discussions with the European Union have already started. Discussions with others have already started as well. But there's a real turning point in front of Canada at this point. Are we going to be working with the U.S. on strengthening the North American market, or are we going to have some kind of rupture with the U.S. and we're going to be forced to look at developing alternative markets for many of our resources?
In either case, is infrastructure spend necessary?
Yes, and I think that the energy markets in particular are areas where there's a lot of market distortion built in. On oil and gas, it's fairly straightforward, but we've got all of our infrastructure set up on a north-south kind of basis so that we are supplying the U.S., and that's been our focus. If we move away from that, we've got to further develop our ability to get those resources out to other countries. Critical minerals is a significant issue too. We've been struggling with developing our critical mineral sector because of the combination of the U.S. Inflation Reduction Act, which has provided a lot of incentives in the U.S., which has drawn investment away from Canada, and the effect of China controlling most of the critical minerals markets and depressing prices as a result of that, which has in turn meant that investors are reluctant to get into that because the returns are not what they would have expected if China had not depressed the prices.
Right, the demand story there is big. In that case, it does sound like within a budget, within a policy, whatever, going forward, it would be probably require government coffers to get involved to do that, if that, again, is necessary. Can you speak to that a little bit? This is sort of the industrial policy question, isn't it?
Well, yes, I think that's the real challenge in front of us, that if we want to develop our critical minerals, it's going to take some degree of government intervention, because China depressing the prices on critical minerals means that investors are not incentivized to try to move towards investing in critical minerals and the development of critical minerals. And as I mentioned before, the U.S. Inflation Reduction Act has also provided a lot of incentives to have that kind of production take place in the U.S. So to counteract all of that, the government is going to need to be engaged in trying to incentivize investment in critical minerals. And then on the oil and gas side, we also need to look at what Canada can do to position itself to be able to serve other markets outside of the U.S. And we're not in a position yet where we can do that.
Okay. Some great questions rolling in here. I'll put some of these to you. So this is over the next 30 days, basically. How might Canadian leaders be approaching the 30-day pause, and what might they be trying to accomplish in that time? For instance, are there regular talks happening over the next 30 days, essentially negotiators on both sides having these conversations, hammering certain things out? What's going on over the next little bit here?
Well, yes, I have had a number of internal meetings on that issue, and clearly the focus is on where President Trump has put the focus, which is the border. How do we address fentanyl crossing the borders from Canada over Mexico into the U.S.? How do we address the issue of illegal migrants? Now, it's a difficult challenge for Canada because we represent less than 1% of imports of fentanyl going into the U.S., less than 1% of illegal migrants going into the U.S. And to be clear, the whole issue of managing borders is usually something that is done by countries that are responsible for managing their own borders. It's not usually the country outside of those borders that is responsible for managing the flow of either people or drugs into those markets. So that's just a situation we're going to have to deal with. And Canada is trying to position itself to be able to demonstrate to the U.S. that we are doing everything we can to ensure that fentanyl is not going into the U.S. from Canada. Illegal migrants are not going into the U.S. from Canada. But it's a difficult issue. But that's the immediate focus, and that's the focus that we're going to have to ensure that we find some solutions to over the next now less than 30 days.
Do you have a sense that defense is something that would move the needle? There's been a commitment to speed up the 2% spending as a NATO member, and potentially more spending. Will that fix everything, or put that into perspective for us?
Well, I think it's an issue that will be helpful. I think the immediate focus of the U.S. is on these border issues, and the lingering threat of these tariffs is tied explicitly to the border issues. But the U.S. has a number of other trade concerns. I mentioned the trade deficit issue. I mentioned unfair trade practices and the renegotiation of the agreement we have with the U.S. and Mexico. But in that broader context, the U.S. is clearly interested in us spending more on defense. So I think that will be an element in these overall discussions that we have to address. And we have to figure out how we can do that most effectively going forward so that we can provide assurance to the U.S. that Canada is doing its part to advance on these issues.
When you said how we do that, that makes me wonder what you're saying. So that is of whether we're developing it, whether we're buying it from some other country or buying it from the United States. Is that how we're doing it? Is that what that means?
Well, with respect to defense, I think we have to look at this fairly strategically. Certain elements of the development of critical minerals, for example, are defense related. So we could be able to commit funding to development of certain critical minerals, and that should count towards our NATO commitment on the spending targets. So I think that as we look at this, we shouldn't just look at making sure that we're spending enough on defense-related spending, but also what are we doing with defense-related spending that is actually going to put Canada in a better position and help Canada develop some of its advantages when it comes to issues like critical minerals.
I feel like you didn't really answer the question there, but that's really interesting. So, yeah, we could put them into our own defense machines. Is that part of it?
Well, yes, I think there's no doubt that in the overall broader discussion with the U.S., President Trump has identified the issue of defense spending as one of the issues. So I think we do need to make a commitment on the Canadian side that we are going to meet at least that 2% target. But President Trump has recently gone beyond that. He's talking more about 5%. So we need to make a commitment on the defense related expenditures that is going to be well beyond where we are now.
I'd love to get your thoughts on some of the players within the new administration, even as a group. But you have the new Treasury Secretary, Scott Bessent, Secretary of State, Marco Rubio, Secretary of Commerce, Howard Lutnick. As a team, as a group, they'll be heading up much of the policy that is being created out of the Trump administration. It's also trade negotiators in different areas as well. But tell us a bit about, to the extent this is a group of people who have some singular mindedness with this particular issue, the tariffs issue, ultimately?
Well, I think that's part of the challenge we're facing right now is that people like Scott Bessent and Howard Lutnick have not yet been confirmed, so they don't really have a formal role with the administration yet. So the president to date has been getting advice from people like Peter Navarro, who is in the White House, Stephen Miller, who is in the White House. And both of those people have some fairly extreme views when it comes to trade and when it comes to how aggressively the U.S. pursues its policies with respect to some of these issues. So he's not hearing from a wide range of voices just yet on some of these issues. I think it would be positive once Howard Lutnick gets confirmed, Scott Bessent even more so once he gets confirmed. And then we're hoping that we can get into more substantive discussions with the U.S. that will put us on a better path.
So in that way, we're both in a holding pattern.
Well, we are in a holding pattern, but that's not stopping the U.S. from trying to move forward on these issues. So I think that one advantage of the 30-day period is that hopefully some of these other people will get confirmed and we can have some other interlocutors that we can deal with from the Canadian side that might be, hopefully at least, more sympathetic to the Canadian position.
Give us your thoughts, if you would, on the interprovincial trade discussion. This goes back to what the domestic economy in Canada can do for itself, and to the extent of which that is useful to GDP, to jobs. What are your thoughts? I've heard a little bit of both on, it'll only be a little bit for GDP, but at the same time, it would obviously create new markets. So tell us what your thoughts on that.
Well, internal trade has been an issue. It was an issue throughout my career of 35 years in the public service, and it was never really resolved. I think that this has brought an increased focus to it. But it doesn't necessarily make it any easier. I think that the notion of removing barriers to interprovincial trade in Canada is certainly something that would strengthen our efficiency, strengthen our economy in a number of ways. But I think there's still resistance because if we removed a lot of the barriers internally in Canada, some parts of the country are more competitive than other parts of the country. So there needs to be an effort to join that up with an effort to try to ensure that those countries, those areas of the country that are less competitive, also have a promising economic future. So that there needs to be a broader plan than just getting rid of the barriers. And I think that's something that's going to need to be discussed as we move forward in that issue.
Is consolidation one potential way of doing that? Of industries,
yes.
of companies, could it lead to a wave of a version of consolidation?
Well, if we removed all of the barriers, or a significant number of them, I think that would move us towards consolidation. But what would that mean for parts of the country that may be less competitive than others? And how do we address that from a national perspective? Because we don't want to see the main focus of the Canadian economy, moving to Ontario, for example, at the expense of other regions. We need to build in a broader plan that's going to allow the country to develop across the entire country.
Well, we've heard leaders from, prospective leaders and actual leaders of parties in Ottawa kind of tackle this. What is the new plan for a lot of those different things? And you hear a lot about infrastructure, getting all kinds of things, including oil and gas and critical minerals, to Tidewater. That requires railroads, pipelines, lots of different ways to go at it that would take some time. Tell us a little bit about the big plan, or at least the plans for the plan. Like, what's hanging out there as opportunities to totally shake up actually parts of the economy?
Well, I think we have a challenge between what we need to do in the short term and what we need to do in the long term. because some of the long-term efforts to strengthen the Canadian economy, look at other export opportunities, other export markets for a lot of our resources, none of that is going to happen very quickly.
But they could remove red tape very quickly. I mean, in a calculated manner. That could be just signing something.
Yes, it could be, and I think that we've seen a rejuvenation of interest in eliminating a lot of those interprovincial barriers, and I think fairly quick progress could be made on some of those that you mentioned. But I think that the whole issue of being able to position ourselves to serve other export markets outside of the U.S. does bring us back to what kind of infrastructure do we need. Clearly on oil, as you said, we need to find ways to get oil to Tidewater. The same on natural gas, the same on some other commodities. We need to look at issues that are going to not be short-term solutions, but longer-term measures that are going to require significant investment.
What about tax policy? I mean, sometimes red tape is tax policy. They sometimes are exactly the same thing. Sometimes they're not. We've heard of repeal from prospective leaders of the Liberal Party of the capital gains. There's discussions from Pierre Poilievre about what he would like to see in terms of tax policy. What sort of negotiation do you think that would take? Or again, could that be what we would put in the bucket of shorter term, like within the year type changes that could be made?
I think that's got to be a major focus, because the main reason, as I see it, behind President Trump's interest in tariffs is to draw investment in production into the U.S. And we're already seeing that happen. A lot of companies are going for the increased security of producing or investing in the U.S. as opposed to Canada because of all this uncertainty that has been created. So if we're going to go down that track, we need to ensure that we're not in a disadvantageous position with respect to issues like taxes, like capital gains. We need to make sure that Canada can offer a competitive investment environment compared to the U.S., or we're just going to see a continual movement of investment and production from Canada to the U.S. We've got to provide a competitive environment.
Can you talk a little bit about manufacturing, electric vehicles particularly, a little bit on what's been invested in the province of Ontario, for instance, the discussion of whether Mexico becomes the hub for much of the production of batteries and so on. That's linked to China. There are issues there. What are the prospects for Canada, particularly Ontario, on this front? We've actually pulled back a bit from it lately, but going forward, what might it represent?
Well, I think Canada is well positioned to take advantage of that move towards electric vehicles. But I think that the challenge we face in the short term is that the Trump administration is going to likely roll back a lot of the incentives, a lot of the requirements with respect to the movement from traditional vehicles to electric vehicles. And we've already seen interest in electric vehicles start to stall somewhat, in part because of that. So we're going to go there, I fully expect, but it may take longer than we had been thinking. So we have a lot of investments in Canada, particularly in Ontario, with respect to battery production, with respect to electric vehicle production. But how quickly is that going to actually come into play? I think we're well positioned, and I would just flag that President Biden, early in his administration, said that he wanted all electric vehicles produced in the U.S. For the U.S. market. By making the kinds of investments that have been made in Canada, we managed to protect the future of an auto sector and Canada as a player in that from a production standpoint. But now I think there's a certain amount of uncertainty introduced because of the U.S. backing off from the focus on moving towards electric vehicles.
What would you like to sort of flag to investors? Everyone's, a little bit caught up in this and feels like we're probably at the very early innings of a very long conversation. Your steady hand as a negotiator, what would you advise people in the markets and just anyone in Canada to just kind of hold on to for the next little bit here?
Well, I think that we have to accept that there's going to be continued uncertainty with respect to our relationship with the U.S. President Trump is a president that's going to be fairly volatile, fairly unpredictable, and we're going to have to just accept that that's a pattern we're going to have to face during his the tenure of his administration. So we've got to get used to that. But I think Canada has many fundamentals, whether it's on the autos side, we talked about electric vehicles, whether it's on critical minerals, our key resources on energy, gas, electricity. We've got a lot of very positive fundamentals. And it's a matter of whether or not we can convince the U.S. to try to move towards a more North American approach to many of these economic issues, rather than have the U.S. try to go it alone. And that will be the key indicator of what kind of success we can have. Whether we can reach that kind of understanding with the U.S. that we're far better off working together, which I think is clear, or whether the U.S. is going to impose further barriers and we have to start exploring other markets. That will be a key pivot point that we will have to be watching for in the months ahead.
And we hope that you'll help us take a look at those in the months ahead. Steve Verheul, former Chief Negotiator for Canada, Trade Negotiator for Canada. Thank you very much for sharing your time here.
My pleasure.
Thanks for listening to the Fidelity Connects podcast. If you haven't done so already, please subscribe to Fidelity Connects on your podcast platform of choice. And if you like what you're hearing, leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. On fidelity.ca, you can also find more information on future live webcasts, and don't forget to follow Fidelity Canada on X. The views and opinions expressed on this podcast are those of the participants and not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy, or an endorsement, recommendation, or sponsorship of any entity or security cited. Read a fund's prospectus before investing. Funds are not guaranteed, their values change frequently, and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks again, and see you next time.